Good evening, everyone. I hope you're doing well. There's been some pretty significant moves in the markets the last 24 hours or so. We've seen a big sell-off, especially in copper, down 22% thanks to Trump's tariffs. Silver and platinum are getting hit, and oil is holding its breakout and looking like it's about to start another uptrend. And of course, the US dollar breaking out of that downtrend. And these are some. Well, let me just remove this title card first. And these are some themes that I've been talking about in my 3-minute short videos in the month of July. If you haven't seen those, you can go back and have a look. A couple of weeks ago, I was talking about silver hitting a 14-year high, how it was looking a bit expensive, how it was probably due for a bit of a sell-off. The oil price breakout, it's been returning to the scene of the crime, so to speak, to test the breakout. And we've seen further, I guess, I don't know, positive's the right word, positive if you want oil to go up in price, but we've seen further developments that the price of oil has made a higher low and a higher high, indicating that it's potentially starting an uptrend, or that it's more probable that it's starting an uptrend. I've talked about the US dollar breakout this month a couple of weeks ago. That's developed a bit further. And then platinum, of course, getting smacked pretty heavily, a bit down about 12% from the high in a couple of days. So let's have a look firstly at the US dollar. And I've kept a lot of my notes on here because I want to keep this video brief. And I've drawn my interpretation of the charts in those previous videos. I just want to show you sort of where we're at. And again, the same basic trend analysis that we can do. My favorite techniques to try and interpret where an asset may be headed, if it's breaking out, if it's breaking down. We can see the falling wedge pattern, the classic falling wedge pattern. Generally so this is the US dollar. We're on a daily chart. That was the high in the US dollar back in January, just before Trump was inaugurated, and everyone was, yay, America, everything's great. And then of course, the US dollar's been selling off his entire term so far. Significant decline in a falling wedge on the daily chart. A falling wedge pattern is generally a bullish buy pattern. It's an indication that a reversal is coming. At the same time, we saw positive divergence on the MACD and RSI, the momentum indicators. So as the price was making lower lows, the momentum indicators were making higher lows. That's what you call positive divergence, which is generally a sign that the trend is getting ready to turn, or at least that the downtrend is weakening. So you had the falling wedge pattern telling you the US dollar was probably a buy. You had the positive divergence telling you the US dollar is probably a buy. Then 2 weeks ago, we got the breakout. And what do you get when you have a breakout? You return to the scene of the crime, because this was the roof. This downtrend was a roof or ceiling, and it's broken through the roof or ceiling. Excuse me, I've got a sneeze coming. Once you break through the roof that was above you is now the floor. So you return to test the new floor, and then onward you go. And look at that, the US dollar is almost back to that 100 level. And if I just clear some of those drawings so we can see it a bit better, we could see that it's now made there was a low there, we made a high, there's a higher low, and now we've made a higher high. So that's textbook uptrend. It's a short-term uptrend. Again, I'm not saying the US dollar will go straight back up to the moon. I'm just looking at the trends that and some of the adjustments I've made to my clients' portfolios in anticipation of this. It's looking more probable that the US dollar is headed up. Now, conversely, we'll just have a real quick look at the Australian dollar, which has been in this grinding uptrend. Again, what do we see? Price trending up, momentum indicators trending down or flattening, so negative divergence all the way up. We did get a little false break there, but if we zoom in, we can see now we've had a big red candle close below, and then today's candle, note the candle wick, it returned to test the breakdown, and it's selling off again. It's a little bit early to call it yet, but this is looking like the Aussie dollar wants to have a little bit of a spill now. Probably fueled by yesterday's inflation number. The Australian inflation number wasn't as bad as anticipated. So if the number's not as bad, that means the RBA can cut rates so they can be back to pumping the real estate hyper bubble, creating inflation. Of course, that puts downward pressure on the Aussie dollar. So I'm not surprised to see that the day we got that inflation number, inflation less bad than what the market thought, we see the Aussie dollar breaking down. That's not a coincidence. That's what you would expect to see. Moving on to gold. Gold not doing as badly. Let's just zoom back a bit to a 1-year chart, but I've talked about gold in some previous videos. Again, what do we see? Now, this isn't a rising wedge. This is more like an ascending triangle, which is generally a bullish pattern. But gold's had a good run. We need to take into account the US dollar breaking out, which generally would put downward price pressure on gold and on anything priced in gold. You've got the quad top, four tops, that sort of $3,475 level, which you can't see behind that annoying little. We just drag that down so we can see it. It's actually 3,475-ish. It's proven a top four times, but note again the negative divergence on the momentum indicators as we hit that level. Not a good sign. We had an uptrend starting in, well, at Christmas last year. It's a 7, 8 month uptrend. You can see the uptrend line has been respected many times, many times, many times, and now look at what's happening. It's breaking down below, little tests. It's probably going to do some of that, maybe not go back to 3,000, but and again, I'm not saying gold will crash. I still think we should have a little bit of gold, but this is why I've reduced position size for clients. I don't want to be as heavy in gold as what we would be if gold was at a discount. When gold's at an all-time record high, you probably shouldn't have your full allocation because there are cheaper assets to buy. Use your gold to buy other things. And I've talked about the gold oil ratio and how oil, if you had gold in February of 2022, you can now use your gold to buy oil 70% cheaper as gold is hitting an all-time record high and as oil is breaking out and still down 50% in dollar terms. I've been talking to my clients about that privately. Haven't really done a video on it. Let's have a look at silver. This is the same chart I've been using on silver in my previous video where I showed here. I didn't, I'd have to fast forward through the video, but again, what do we see on silver? We see a rising wedge pattern. Note that, so a rising wedge pattern. So wedge patterns are generally an indication that the trend's about to turn. So if the wedge is rising, that's generally a sell signal. It's a sign that the uptrend is losing momentum. It's getting squeezed at the top. The moves are getting less volatile. You're squeezing, you're probably due for a turn. So at the same time as the price is making higher highs, the momentum indicators topping out, making lower highs or failing to make new highs. And what have we seen here from silver? We've got a breakdown now. So from the high on 23rd of July, we're now down about 9% on silver. Now, generally what happens when you get a breakdown, you get a return to the scene of the crime. So maybe silver does come back for one more crack at $40. But I would say the most probable outcome is that silver is currently expensive, at least in the medium term. Short term, maybe and I'm not advising any short-term trading, nor do I do that. Maybe a short-term trader would want to buy in for that rebound, that retest of the breakdown. So maybe it goes back up to 40, but for now, it's looking like the uptrend has broken. It's looking like you probably don't want to have your full allocation of silver. The chart is not, it's not a buy on the chart. We're just using trend analysis, some basic tools. Platinum, I did a video on platinum the other day, and I mean, platinum is even more obvious. Higher highs, a really sort of squeezed rising wedge, already had the breakdown, a couple of little candle wicks to test the breakdown, and now it's spilling to new lows. In fact, that sort of level there, that's fairly key. That sort of 1330 level, you can see touch there, touch the breakout support, and now big red candle to smash it, and now a candle trading below that. Negative divergence on the momentum indicators, signaling that it was likely a top. You had the rising wedge, the bearish pattern, so not looking too great for platinum, and I covered that in my previous video, and I felt that there's a strong probability that platinum needs to come back to maybe the 1100 level, which means from the high, a sell-off of 25, 26%. I'm not saying that will happen. I'm just saying, like, be wary. Don't be like a lot of our favorite YouTube gurus who are just eternally bullish on precious metals. You can have a level in your portfolio. For me and my clients is generally between 10 and 20%. And I won't advise a client to have 20% of their money in gold and silver and a basket of precious metals when they're hitting all-time record highs and they had good runs. When they've had good runs, we sell a bit, we reduce risk, reduce position size. And if if platinum dips back here, then I will look to increase allocation, or we'll see how the charts develop. I don't know if it's going to go back there. I'll let the market show me what it's got for me. Oil. This is the same chart. Sorry, copper first. My apologies. Copper. I haven't drawn anything here, but what a sell-off. I mean, on the 24th of July, the copper price hit $5.95 per pound, and now it's down 26% from there. There wasn't really much of an indication on the chart. I mean, there is now. I mean, that's breakdown. Yes, maybe you could say that was a see. I wouldn't call that a rising wedge. I'd call that trend. That was a rising wedge that failed. So see, sometimes the patterns aren't perfect. They're about probability analysis. No negative divergence there. Note that the momentum indicators were still making marginal higher highs as the price was. There wasn't really a sell signal on copper. It's just that Trump came out 2 days ago and said he's slapping 50% tariffs on copper imports. So that means copper is going to be a lot more expensive for American companies, American consumers to buy, less demand, price collapses. So this one you couldn't quite read on the charts. You can thank Mr. Trump for that one. What I have been advising my clients to do is to use some of our gold and silver and platinum and palladium basket fund we own. And keep in mind, I'm just letting you know what my clients and I are doing. I'm not giving advice in this video. I do not know if it's appropriate for you to do this. But what I've been doing is selling some or all of that precious metals basket fund and going into a broader commodities fund that still has an allocation to gold and silver, but also has the same level of allocation to oil and natural gas, which I see as relatively underpriced. This chart looks a little bit complicated, but I've covered it in previous videos. We can see this $65 level on oil was very key. Note we were in a falling broadening wedge this year, which is generally a bullish pattern. We had a double bottom with negative divergence. Note the $65 level tested. And then in June, it broke both the downtrend line and the $65 key previous price level, and we got a massive pop. That was a very big rally in the space of a couple of days, 19-20%. At that time, I told my clients that this is probably overdone and we need to sell our positions briefly and just reduce risk because that's a massive run. Because again, what's happened? You get the breakout and then you get the return to the scene of the crime. The $65 level was the scene of the crime where the breakout occurred. And then you see oil spending about a month hitting that level, testing. And now note that last night it made a fresh high. This was the previous high on the 9th of July or around the 14th of July, depending on which candle you want to take. And note we've made a fresh high now. So that's good. That's a sign that an uptrend is forming. And in fact, I'm going to regret deleting all those drawings because it took me a while to draw some of those. Little bit of an uptrend. I don't like these angled trend lines until we can make a pattern out of it, and I don't like them as much in general. I mean, if you're being generous, you can draw the trend line there and say touch, third touch. I wouldn't put too much faith in that, but I would say that, like, based on what we've looked at, it seems like oil is completing a breakout, and that increases the probability that oil is going to go up in price as some of these other metals are coming down in price. Natural gas won't really look at, but natural gas is way, it's way down. Its chart looks pretty ugly, but I just think, I don't necessarily want to allocate specifically to natural gas, but I just think the fact that it is down, that's the high in 2022. It's still down at nearly 70% from that level. So you'd have to say relatively underpriced compared to stocks at all-time highs, gold and silver, gold hitting all-time highs, silver hitting a 14-year high, Bitcoin all-time high, on, the list goes. A relatively underpriced asset, and mainly because that's why I've switched across to a broader commodities basket fund to reduce our allocation and risk to gold, silver, platinum, and palladium a little bit, and then add or increase or generally add, because most of my clients didn't have any allocation to oil specifically, add some allocation to oil and gas without, having no gold and only oil. You do it in stages, or we do it in stages. That's what I advise. So anyway, some of these trends that I've been talking about, if you've watched my previous videos, some of these trends are starting to develop further. Not necessarily good for the world or good for us, in part maybe, but it'll be interesting to see how these play out. It's just, again, the charts can be very helpful. You have to listen to them. Doesn't mean you have to do everything based on charts. You shouldn't do that. But risk management, don't get too caught up on one thesis. Look at the charts, look at what is relatively overpriced or underpriced, and just make little adjustments accordingly. You don't have to take an insane amount of risk. Just manage your, let's make sure we're managing our portfolios responsibly. Anyway, that's almost 15 minutes. That's probably enough. Thank you so much for listening, and I'll be back with another video soon. Cheers.